Welcome to the Stock Market Rapid Recap. It is October 22nd, 2015. I'm Sasha Evdokov, and today's lesson will be discussing how and when to increase your share quantity when trading stocks. Now, we've already talked about scaling in as stocks move higher. And if you go to the website and you just scroll for the last 2 or 3 weeks ago, you can see this video right here that just talks about one of the lessons from the greats about scaling in and buying stocks as they move up, not down. So today's lesson, we'll be talking about how to scale your share size or quantity when you're ready to move up, because I know sometimes it can be a little more intimidating if you're just getting started in the stock market, but now you're starting to find some success. So how and when do you start accelerating or pushing on the gas pedal to start increasing your share size? And I know this can really be intimidating when you're getting started and you really don't know when to start picking up speed. And that's just something that you have to deal with as part of growing pains as you start getting better as a trader or as you start getting better at trading in general. So in this video, that's what we'll be covering and focusing on, is just talking about share quantities and to show you that you really don't have to trade large to make a good income or to make a little bit of extra money. I don't know your situation. I don't know what it is that you're trading, investing in. I don't know how much capital you have in your account. But I do want to share with you today a little video that I am going to share with you, the account of showing you that you don't have to trade large to make a good percentage return on your money. And I just put on a trade 2 days ago. I'll share with you my IRA trade that I put on just for the sake of making this video for the rapid recap, to show you that you don't have to trade large to be able to make a few good percentage points in a few days on your money. So before we get into that, what I'd like to do is let you know that the book for penny stocks is out. And if you're looking to practice more on stocks that are less than $10, to trade them to the upside, to trade them to the downside, so the penny stock book is out. And this is mostly a chart book, so 95% of the book is all charts, and the charts are really there to share with you some insight about where to draw the trend lines. It's there to show you where to get into the stock, where to take some profits, and really just some insights about penny stocks or stocks less than $10. Now, the traditional penny stock terminology or definition is for stocks less than $5. Used to be for stocks that are under $1, but now they raised the definition to $5 due to inflation and other things. So, but for the book, we focus on stocks that are less than $10. So if you're interested in that book, you can go ahead and go to the website in the book section, and you can go ahead and get it on Amazon. And again, the charts are black and white, but it's still a huge learning benefit to those of you that are looking to practice and study and learn more about technical analysis and charts. So there's the other books as well. If you want to get into those books, there's more charting practices that you can do. And many of the other books that we have are available on the digital format now on Kindle. So you can also get those in digital formats. And this book will be turning it into a digital format soon, as well as this red book as well. So a few of them are already on digital format. So we're just slowly converting them and transforming them to the other mediums. Now, as far as critical charts go, after I record this rapid recap, because it's actually afternoon time, so after I record this rapid recap, I will do some critical charts for everyone, and you'll get a handful of charts in the website. So go ahead and check for that later tonight or early tomorrow morning. So with that being said, let's move on to the screen, and I just want to share with you some insight about just starting a trade and just getting yourself going, because increasing your share quantity and just getting the act of trading down initially sometimes can be difficult. So let's just go to the Thinkorswim platform, and I'm going to share this platform with you because it's just one of the easier platforms to go with. So here, what I have is the platform, and what I'm going to do is pull up a magnifier. Okay, so here is that magnifier right here on the left side. So that way you can just see the zoomed in version of my mouse. I just understand that sometimes it's a little difficult to read the numbers. So just try and make things easy and more simplified for you guys. So in either case, this is actually my retirement account and just one of the trades in the retirement account. So I just wanted to share with you that you don't have to trade large to make a few extra dollars on your retirement account. And this trade that we have up is actually a calendar spread on Netflix. And you can see the current local date and time here. Actually, it is in New York, 11:51, October 22nd. So you can see the time there moving and acting and behaving. So in either case, this is a calendar spread that's live with real money. And I just want to share with you that you don't need a lot of shares to make some profits or to increase your standard of living or to just improve your life a little bit. Now, this trade we put on just a couple days ago, just 1 or 2 days ago. And if you don't know much about options, this is typically the way I trade my retirement account just because it's a little more stable and stability is better in these option trades. So the way it works is this green line is the expiration date if you don't know much about options. And this white line over time deteriorates because you have a multi-leg spread. You sell one of the current month and you purchase a protection in a later month. And the one in the current month expires over time, and that one expires quicker than the one in the later month. So that's the basics of this trade. Now, as time moves on, so as I shift the time, as you can see, this white line will get closer to the green line. And that's really what happens. That's where you make money and capture profits. So if we get to November 10th and the price stays exactly where it is, I would be $105 in profit. Now, unfortunately, we aren't there yet, so we'll go to today. So here we are at $16 in profits of real money. And today we made $1.70 from doing absolutely nothing. And this stock can move all the way up to $102 right now, and I would still be at breaking even. And it can move up to or down to $91 here, and I would still break even. So it can move along this curve. And that's what it does in terms of shifting back and forth. Stock prices can't be in two places at once. Now, the beauty behind what I wanted to share with you in this example was that the amount of capital that was invested. So my maximum loss, if the stock, let's say, goes to $40, is $364.96. So $365 is what my potential loss is on this trade. Now, right now, you can see we're up $15, $16, give or take. Sometimes we're up $17. Sometimes we're at $13. So we're isolating there in that region for this trade. Now, the point here is that we put it on a couple days ago, just 2 days ago, and our theta, every single day, we make $3.16. Now, as time moves on, you can see this theta continues to increase. So it accelerates as we get further in time. And that just continues to increase and accelerate with time as time moves forward. So as long as we stay stable in my safe region, things will look good for the future. So in this case, on $365 in profit, what I wanted to do is share with you the percentage, because remember, it's all about the percentages. So if we take a calculator out and we do the calculation, so let's just say a nice $15 and we divide it by 365 in profit, we're looking at basically 4.1% on our trade or on our money. 4% in 2 to 3 days. So 2 days to make 4% is huge. It's astronomical. You can't really get those kind of percentages in the bank. You can't get those pretty much anywhere else. So on this account or this trade, this is a starting point. So initially, when you're first starting, and even for me in my retirement accounts, I start with something simple, something like one contract or a handful of shares. Now, it's going to depend on which stock you're trading, how much your account is, and so on, and how liquid it is. Now, normally for a retirement account, I will start with simply one contract. And the reason I do that is because as things adjust or move, then I want to make an adjustment, or I want to be able to make changes to my position. So what I can do is, if this actually goes against me, what I can do is add a second calendar, and I can go ahead and add this one as an example, and you can see how that changes my profit picture or my potential. Now you'll also notice the theta increases because we're adding another position on it. So now we have $6.47 that we would be making every single day from expiration of our calendars or options. Whereas if we don't have that, we only have $3.18 that we're making, which is still perfectly fine. It's perfectly fine to make $3.18. But to get the position going, we started with simply just one. And then if we add the next one, if things don't go in our favor, we can shift that graph this way. If we completely miss the boat and the stock continues to move lower, let's just say we can go ahead and add a calendar in a different region. So let's say we take it to the 90 level. So we can put on a 90 contract right here, and now it shifts our graph. So you can see that without it and with it. So with one contract here starting out, it gives me flexibility to move one way or the other. But what I can do is actually bump it up to 2 contracts or 3 contracts next, because that first contract allows me a little bit of cushion. So now we start creating an even bigger picture. Now we're making $10 per day. And as that stock, if it heads lower and we make that adjustment, we're at $12 per day. And with more contracts, you're making $17, $18, $20 per day. And here at $205, if the stock stays stable for just a week and a half, $205 at a max risk here of, let's say, $1,400. So taking out our calculator, let's just say these numbers won't be exactly perfect, but let's just say at a 1,400, you're looking at 14.2% in terms of profits in about a week or two, which is astronomical. It's phenomenal when you're talking about returns of investments. And this just takes time to get there. Now, the reason I wanted to explain this with options is because options are a little more complicated. And because it's more complicated, I wanted to explain it with this so you saw things with a clear mind. Because if I explain this with simply just stocks and getting in and out of stocks dynamically, or getting in and out of stocks with 1 share or 5 shares, you might think it's too little. You might think that the return of investment is minimal and that you can't make a living trading just 10 shares of Tesla or 10 shares of whatever kind of stock. The point here, what I'm trying to make, is that if you break things down into their simplistic forms, look at the bigger picture, look at the percentage, and look at what's possible as you start scaling and leveraging things up. You build things slowly, and you continue to evolve and make dynamic trades. But for many people, what they want to do is jump in with, let's say, 5 or 10 contracts or 1,000 or 10,000 shares, and they can't do it. They can't keep up, and that's where they fail. So that was really my whole point of sharing this example with you. And again, like I said, this is real money, current local date and time. It's exactly noon. You can see the timer still going, and we're recording. So I wanted to just share with you this insight of the chart, of the trade, of what you can do with just $360 of an investment. Now, granted, it takes time to learn to get there. It's going to take your time and energy to learn how to make these kinds of trades. Now, if you're studying stocks and trading them to the long side or to the short side, that is the better approach. That is the more simplistic approach to get yourself started, because it is a lot easier to do these kinds of trades for the long term, for the stock market, for swing trades, for short trades, than it is to do option contracts. But again, my whole purpose behind sharing that option trade with you was just to show you that starting small, there's nothing wrong with that. Now, as far as getting into other trades, getting into deeper trades like this, and increasing your size, increasing your position, increasing your scale, what you want to do is find your consistent pace. You want to make sure that you're seeing things and you're able to trade consistently first, such as 100 shares or 10 shares or 5 shares or 3 shares if you're just getting started, and stop worrying about the commissions. Learn to trade those shares correctly first based on the chart. So here, if we're looking at Netflix and let's say I'm waiting for a break, let's say I'm waiting for that stock to break lower, I may go ahead and, enter that trade here with just 3 shares. Of course, it's going to cost me a few commission dollars. It might cost me $5 or $10 in commissions between doing both the trades. But if I execute the trade right, and then I go ahead and take profits of 1 share somewhere, over here, and I was patient enough to hold it, then that would go ahead and tell you that you're trading properly. Most people worry about, they saying, hey, well, I didn't make a lot of money on this trade. I didn't make a ton of cash because I didn't trade as big or large. So what happens is, let's just say that they went into a stock right here and they executed it perfect. The trade was right. You had the right pattern, meaning that you had the right consolidation pattern right here. Let's just say that everything right there, let's just say everything right here was perfect, right? And you got into that trade right here on this arrow right here, and everything looked good. Everything was perfect. And then you got out right here, and then the stock started to sell off, and you said, I didn't make any money. I didn't really trade right. When in fact, you traded perfectly. You traded perfectly because the stock topped out. The stock got high. You had a little pattern here. You got in at the right time at the pattern. You got out. You took your profits. You took your money off the table. You reduced your risk. And the stock later was acting weak, so you sold it. So there's absolutely nothing wrong with a trade like that, even though it didn't go very high or it didn't explode to the upside 70 or 80 or 100 points. It just simply was a smaller trade. But everything that you did was correct. So as you start moving into trades, you have to start looking and understanding that your actions are correct rather than looking at a stock and saying, hey, well, the stock didn't go as high as I wanted it to. And the thing is you'll never get a stock to go as far as you want it to. They pull back, they consolidate, they retrace, they power higher, they hop around. All you can control is your money. You can control your money, your stops, your entries, your exits. So you can control those things, but you can't control exactly how high that stock is going to go or how low it's going to go. That's the operators. They control those things more so. So when you're scaling, when you're getting larger share quantities over time and you're looking to see, should I increase my share count, start looking at how consistent are you? How consistent are you in choosing your trades, in choosing your stocks, such as the McDonald's trade that we talked about a while back right over here. So we talked about this one. It was in the critical charts, and then we talked about it popping potentially higher right here. And then when earnings came out, it powered higher. It dipped down to this level, and if you were watching it, you could have bought it a little bit on the dip right here, and you'd already be up $2. Now, no, of course, I would have gotten out of my position earlier before earnings, and then, you see these bars come in, so even if you got in right here, you'd still be up about 30-40 cents right now. Now, this gap is something to be mindful of, but are you doing the right things? That's something you'd have to evaluate yourself. And if you're doing things the right way time and time again, and you're seeing the patterns, you're seeing the trend lines, you're seeing how stocks move and behave, and you're able to do the right things, you're able to take profits, you're doing things systematically, then by all means, go ahead and slowly increase your share count. So if you were trading 3 or 5 shares, that was just real money practice trading, then you can go ahead and do, let's say, 20 or 50 shares. You do that for a couple months, 2-3 months. If you're still consistent, then you can go ahead and go to 100 shares or 200 shares. If you're not, then you stay where you are or go back down. So it's a building block, and you can continue to increase things. And if you see the markets acting weak, acting choppy, if things just don't look right, but you're still trading consistently, you can still just throttle back and trade a little bit lighter. If the market's not behaving the way you need it to, why trade large? But when the stars are aligned, when everything looks good, when there's dancing angels in the street, if everything is lined up perfectly, in bull markets, typically you can close your eyes, throw a dart, and all the stocks will go up, or the stock that you hit the dart with will go up. Now, in this case, we don't really have a full bull market. Instead, we just have a market with stock picks that tend to do fairly well or break out. So here's one that's breaking out today and one that we entered here in the morning. So this is PepsiCo. And PepsiCo, you can see here's the trend line right here. The earnings were around this area right over here just a couple weeks ago. I think it was October 6th they had earnings. So here's our resistance line. If you look on the daily, you can see there's the line break. It was hitting it there perfectly. And if you go into the intraday and you zoom out, there was your trend line right there. So even if you got in it a little bit late, let's say over here, so here's kind of the stock heading higher, boom, for the day. So looking at these things and spotting them accordingly, you might go ahead and trade. You might trade lightly at the beginning, and then you might add to that position if it continues another 100 or 200 shares or 500 shares, because it only costs you an extra $5 or $10 to make that trade. But the $5 or $10, the risk, if that stock would have sold off, if that stock would have moved lower and continued to move lower, now you could have gotten down, $2 or $3. And 100 shares at $3, that's $300 loss rather than paying your commission of $5 or $10. So think about that for a minute. So those are the two stocks. As we go through it, right now we got MCD. There's the weekly. We also talked about PepsiCo, and let me just go ahead and continue with some of these stocks that we have on the list that I wanted to share with you. Of course, I will share more stocks with you in the critical charts, just a little more detail. But for this video, my main goal was to share with you the lesson that you don't have to trade large to make a good return on your capital, to make a good percentage of return. You simply just have to learn how to properly trade and then build yourself up step by step. So taking a look at some of the other stocks, CMG, talked about the resistance line up here. That stock broke lower right here. We were talking about this one as well in the critical charts. Broke it, tried to pop higher a little bit to fill that gap, but again, it's showing weakness. When stocks break from these highs, from the highs with high accelerated volume and wide price spread, that's troublesome. So always be mindful and then step aside and get out. All right, next one, Solarcity, another one we had in the critical charts. We had this one actually over here in August on the critical charts. It's been isolating here, but it's still showing some weakness. Today it's up 88 cents, but really it's breaking that critical line. So again, showing some weakness. Keep in mind the earnings. AXP also with the earnings selling off majorly today. There was the first initial line, which you can see the pattern back here. And then also we have the next support line. And if this breaks this, because we have the moving average right here where the stock is breaking. Look at that moving average, how that moving average was used in part as a support area. So this moving average was really that support area. And now that one time it hit it, second time it hit it, a couple times right there, it bounced off of it. And now it actually is breaking it. So if we break right here, if we break this line, because we have these areas right here in this stock as well, if we break this line, we could see some serious trouble in the stock because we are picking up some volume, and you can just see that major sell-off with a huge gap. So be mindful, be careful, or be prepared to short that one. The Dow Jones still, we're popping heavily and high today. As you can see, it is popping higher. So my analysis, what is my analysis? What do we think about the market? Well, I talked about it that this was the line I was watching, the line in the sand, and we are breaking it. Are we breaking it on heavy volume? Well, at the end of the day, we'll tell you. If we were breaking it on very high volume, you would already see probably about 8 million or so shares, but it is picking up. So So it does look good, but unfortunately, we're still toppy and still at the highs of the market right here. So even if it comes up here, we could have some resistance in that area and level, which would mean that we can do a couple different things. So we can go ahead and break higher here, and we can attempt to go high here, and it can reject. The other option is we can go here, and then we can move sideways here in this region and go sideways. And then we can also go here, play around a little bit, and then try and break through here. Now, if we break through here, I wouldn't really like the market. I would be more on the shorting side because it's too fast, too quick. That market would be too fast, too quick. It takes time to digest moves. Or the other option is we could just go up here, move sideways, roll back over, and that could also turn out to be one of these situations. So just be mindful of how things are moving, acting, and behaving. Look at how things are going into the resistance lines, going into the support lines, and is there really fuel? Is there substance to continue the move? Always things to keep in mind. All right, so I hope you found this video helpful, insightful, maybe a little motivational to show you that you don't need to trade large to make a good return on your money. And just wanted to share with you those little tips, insights, and words of wisdom. If you're interested in the stock market book, remember, just go to the TRADERSFLY.com website, and you can go to the books section, and then we have that penny stock book available. You're welcome to go ahead, get it, just to get more practice in. As far as what's coming up, next week we may or may not have a rapid recap, and that's just because I have some business things and personal things that I need to take care of throughout that day, so it'll be extremely busy for me. So I'll see if I can take care of it, but if not, we'll definitely try to resume the next week after that. And now that we have the penny stock book wrapped up, I do have one or two little business trainings that I need to fulfill and complete here before the end of the year. But all in all, the rest of the focus is spent on creating the massive option trading course. So that'll be my plan and my focus, and hope that you can join me on the next stock market rapid recap that we have. Thanks again, and I'll see you next time.